Welcome, everyone. It's such a great day, and we're here going to be discussing everything related to venture capital and investment under the RWA space. So what's best not to discuss this than with our fellow panelists today. We have Vanessa Grellet, managing partner at Arche Capital. We have also Marguerite de Tavernost, who's also an investment director at Cathay Innovation, and Jiang, who is the founder and CEO of MassVentures. So please give a warm welcome to our fellow panelists. So before we kind of start, I just want to give a quick intro to our panelists today and why we're talking about tokenization. So Vanessa, you've been 20 years of experience in traditional finance before joining Consensus, and you're also serving as an executive director. And Marguerite, you were also working with Ledger and Cathay Innovation. You were one of the early investors into Ledger back in the Series A round. And also Sunny, we have such a diverse kind of panel discussion because you work closely with family offices and the VCs. So before we kind of dive into discussion, I'd like to ask you, if you can give a brief introduction about yourself for 30 seconds and just one hobby that you're quite passionate about, just to make this a little bit more fun.
Yeah, thank you so much, Malak. It's my great pleasure to be here. As I said, I'm a founder and CEO for MassVentures. I'm based in Netherlands. We're building the investing platform, leveraging the power of our real asset organization and AI. And we try to bring impact on chain, bridge the impact with family offices. On the other hand, we also try to really bring the new era of wealth management to every family, not only ultra-high net worth family, using the AI. So we're very passionate about blockchain, Web3, and tokenization as a technology, and the impact it will bring to our society.
Hi, everyone. So I'm the managing partner of Arche Capital. We focus on the intersection of Web3, or digital assets, and financial services. We think that's the biggest opportunity and the best product market fit for crypto. And so basically, tokenization is a big part of what we focus on, or tokenization platforms, and happy to discuss today.
Hi everyone, I'm Marguerite de Tavernost. I lead the Ledger Cathay fund. So we are an early stage VC fund investing solely on Web3 investments at seed and Series A. We're born out of a partnership between Ledger and Cathay. And one of our key focus from the investment is also the intersection between financial assets, the financial industry and blockchain. And so that's mostly evolving around financial assets, tokenization of everything.
That's so wonderful. Thank you for the introduction. So when we talk about RWA, it means different for different people. So the meaning really depends on who you're talking with. If you're talking to an artist, they will definitely be thinking about, tokenizing their IP on chain for their creative works. When you're talking to institutions, you're here talking about T-bills, tokenizing these T-bills assets. So for you, in your experience in VC space, what does tokenization mean for you? And also, why do we actually need it at this point?
Okay. So the largest sort of asset class in RWA, or real world asset, it's not a name that I really like because it doesn't really represent kind of the space of what we want to do, is stable coins and tokenization of funds. I would say those are the largest asset classes that we've seen tokenized. There is a place where you can think about, digital arts and things like that, but it feels like it hasn't really taken off. And the question that we ask ourselves when we tokenize things is like, what's the added value here for people? Like, when I was at Consensus back in 2016, we had a tokenization engine for funds. And then no one cared because there was no additional efficiency. There was not a different business model. So until everything moves from the existing financial infrastructure to the new blockchain-powered infrastructure, it's going to be really hard to demonstrate the value of RWAs. And I think stablecoin in that sense is really the bulk of what's happening here and where the innovation is.
And to follow up on what Vanessa said, there are probably also different waves in the tokenization. So when we launched the fund 2 years ago, our vision was the fact that we strongly believe that at the end of the day, the whole economy is going to be tokenized, and so that we're going towards that term of tokenization of everything. But realistically, this happens in waves. When we launched the fund 2 years ago, we looked at a lot of different sectors. We looked at real estate being tokenized. We looked at kind of like more daily life consumer items being tokenized, but we also realized that in terms of adoption cycle, we were not there yet, and that for this kind of tokenization to happen, it first needs to start at the financial level, because that is what then fuels A, regulation, and B, institutionalization of the crypto industry. And so that's why we ended up refining our investment thesis around financial assets specifically. And for us, for instance, that stands in different places. One of them is the bridge between traditional finance and blockchain. So how do you apply processes from the traditional finance industry to the crypto markets? Then you have also how do you use blockchain technology to facilitate any kind of processes in traditional finance, and anything around yield management. And that's also happening a lot around RWAs, including stable coins and how you can generate yield with your stable coins or with any other kind of liquid token that can represent a financial asset that exists in the real world.
Yeah, maybe I can add a little bit more on that. First, I think tokenized asset is different than cryptocurrency, because sometimes people mix these two. So they are not exactly the same, because tokenized asset is representing the underlying asset. On the other hand, as they also already addressed, I believe eventually all the assets will be on chain, and it's revolutionize the next our future of finance, I would say. And for now, we talk about the asset which we are familiar with, like real estate, like fine art. I saw downstairs there's a wine there and tokenized gold, and it's fantastic. On the other hand, for my company and what I'm doing, I'm especially diving into the tokenized fund, because I believe the asset management is a huge industry, and the fund tokenization, also especially for the VC, I don't think so far VC firm or there are many VC firms already using tokenization to raise fund for themselves. Because VC, on the one hand, you need to raise fund. On the other hand, you allocate fund to the startups, and so there are two ends. So I think from these ends to the VC, I think it will help quite a lot to help VC as well to be easily, or let's say, of course now it's not that easy, because the whole infrastructure, the whole process, whatever, is still under construction. Well, I think in the future, it will be much easier for all the VCs, not only VC funds, PE funds, and hedge funds. If they want to raise funds, it should be much easier towards global investors. And also you can have, we all know there's a very long cycle of VC investments. Sometimes you talk about 5 to 8 years, even longer, 10 years, in order to get a return. Well, on the other hand, if you allow a tokenized fund and you enable people to transact their token before kind of the maturity time, in fact, that's really provide great liquidity and possibility for more people to think about to step in. Instead of waiting for 10 years, well, maybe they can do whenever they want to do that. So I find that's really meaningful, that we should leverage the power of tokenization for the future of funds and finance.
I totally agree with you. And we see a few crypto funds who have started, like Parify, did some tokenization of part of their LP structure. I think that is going to happen. I think you have to distinguish tokenization of existing digital assets and tokenization of actual physical assets. Because there's a digital twin problem, and what happens if the actual physical assets disappear, like gold, etc. And so there's that whole complexity. But I'm very bullish on the tokenization of already existing digital assets, because basically what you do is you add a layer of liquidity if everything is on crypto rails, right? So once traditional stock markets will have their assets being tokenized, or new IPOs being totally digitally native, then you create an entire new marketplace where you can add DeFi, you can add other structured products issues that are digitally native and that seamlessly can flow. And I think that's what you alluded to for the LP stake, because you get, if you do secondary of LPs, you have to find the LP we want to sell it to. It's just a clunky process. If you have an LP stake that's represented by a token that you can easily move around, provided that you respect the legal constraints, I think you will unlock a lot of liquidity. That being said, as a VC, like, we have a different perspective when we think about investing. It's like, how am I going to make 100x on this investment? So if you tell me that you're tokenizing this asset and basically you're doing the same thing in the real world, but it's on a token, like, that's not enough of an innovation for me to invest, and not enough of a potential. So, that's my bias, or our bias as a VC. It doesn't mean that it's not great businesses. It just means that it may not be like a venture-backed business sometimes.
Okay, got what you mean, Vanessa. So here then, when you're assessing like asset classes, it really matters that they have attraction and also like enough demand to kind of back up the liquidity, right? Like we've seen like in Asia, for instance, there's a lot of projects tokenizing jade stones because it's quite scarce in the market. How do you see that when you're assessing asset classes? Does it really matter mostly the market maturity or the scarcity behind the asset class?
Yes, actually, that's precisely a point that we run against when we launch the fund, where actually for things like you mentioned, gemstones, in our opinion, from a VC perspective and from the kind of returns that you expect from the investment that you do, the investment time frame that you have as well, and the market size that you are looking after, we realized that those markets were starting to be disrupted from a supply chain perspective, but that the process was actually not fully mature yet. And so that's why we ended up focusing on infrastructure and then financial assets. So those are really the core focus that we look at. And for instance, we invested in a company called Midas. They tokenize treasury bills. And so for instance, the tokenization of treasury bill is something that has been very mature both in the US and in Europe. I wouldn't be able to say in Asia, actually. And so when we look at those kind of markets, then we realize that we want to have a place to bet in the space. And so we went to the US. We spent a lot of time with Ondo Finance, which was the established leader in the space. And that if you read the news about Trump, and you probably heard of them and their activity recently. The issue that we saw with an actor like Ondo Finance was around regulation, because they don't have access to the secondary market, meaning they don't have access to the retail investor for selling the tokenized T-bills. Because of the SEC regulation around that, you have a KYC processes that are very strict around retail users, and so if you want to sell those T-bills to those retail users, you need to go through this each time. Whereas in Europe, we also have a strict regulation, but actually you do have access to the secondary market if you do tokenize treasury bills. So We came back from the US realizing that the market was huge, but that we wanted a company specifically regulated in Europe. And then you can look at the different regulations between the UK, France, and Germany. We ended up backing a UK-based but German regulated company with the BaFin. It's actually the toughest regulatory body in Europe for those kind of assets. And so that in that sense we were quite secured. And now actually today Midas announced that they were launching a new yield product around basically liquid yield tokens, allowing you to do even more DeFi placements with your existing assets.
Yeah, I want to add, like, on the regulation side, I know we're all very bullish in the US, everything's going to change, but one, it takes time, and two, if you're tokenizing a security and you're offering that tokenized representation of a security, it's still a security. So we need to be realistic about what we'll be able to do there. Because if it mirrors the exact business model where you receive, cash flows from a business, it's still a security in my book, and I'm a recovering securities lawyer. So you need to understand where is the added value of tokenizing that specific asset, and is it going to change, or is it going to grow your end user? Is it going to make a better marketplace? What's the edge here?
So we can say that regulation plays a big part of the conversation here once we talk about RWAs. So we also talked about different asset classes. So Sunny, for instance, you know that fund tokenization is considered like a third revolution for asset management. And you've been really much involved in the space, kind of bringing impact to RWAs. So what does impact mean to you in terms of working with these nature as an asset classes, for instance? And, often, like also Vanessa and Marguerite said, that when they're assessing projects, it really has to do with, what kind of return they're going to get from that. But when we talk about nature as an asset, the first impression is, would that actually bring us, revenue? How do you kind of assess that?
Yeah. Let's talk about, two parts. One is about the fund. I elaborate a little bit more on that. Of course, we have PE fund, VC fund, and we have hedge fund. But normally, this kind of fund has very high bar. There's not everybody can step in. You need to be accredited. You need to be there are some criteria on that. I truly believe tokenization is revolutionary, and it really can help a lot of not only retail investor, but also the institutional investor to dive into this new realm and to broaden their scope of investments. And for the funds, I'm also, because my company is active in working on fund of funds. So that is also very interesting to try to attract more global investors, LPs, and from there allocate the fund to either VC or the other fund manager. And then the other angle, mention a little bit about the family office. Because I'm working with many family offices in Asia. It's really is a new chance. We have many newly established family offices in recent years. So far, global, I would say, single family office is around 8,000. And every single family office, we're talking about 600 million to 800 million, at least this amount of asset under management. And this number will increase to 10,000 by 2030. That means much more family offices will be established. And especially in Asian countries, there are a lot of self-made billionaires, and they are first generation of the owner of the family business and the family offices. So they are much more open to the new asset class. That is very interesting, what you mentioned, the asset class. So first we have a crypto asset class. It's still relatively new, even though we are native in crypto, but for majority of people, crypto is something really new to them. And on the other hand, we're also working on a nature asset or you call that natural capital, things like carbon credit, like a biodiversity credit, or like the other natural capital, which is under development. That's what we call that is bringing impact on chain. And what I noticed about is that more and more this kind of new family offices, they're willing to allocate a little bit more percentage of their assets to this kind of new asset class. Either try crypto. On the one hand, it's very interesting because they know traditionally they invest quite a lot in cash and cash equivalent, fixed income. While on the other hand, they all know that the problem of cash is inflation, right? So everybody wants to keep the value of their money. And that's also partly is a motivation for them to explore, even though education, efforts really needed, but they're exploring to allocate certain small amount of percentage of asset to the crypto asset. On the other hand, for the nature asset, for the impact, especially young generation, they care about that because in principle, you don't need that much money for your living. Well, what is the purpose of having those kind of wealth and create impact to the society? They care about that. So slowly, I think many organizations are working on creating different framework standards and try to bring this kind of nature asset on chain. Of course, there are many challenges, something like how you evaluate that, how you verify that, how you monitor that. But I think we can solve the problem, just like how we built the whole blockchain world from zero to now. I think we definitely can solve those problems. In the end, that's every money spending on investing on impact and investing on nature will get a positive loop to give back to the society. Then we have a better world to live. That I actually believe, and I think I'm happy to see more and more family offices are stepping in. Just one number, maybe last words. Because family offices they are running very silently, like a background. They are not that much high profile. And in fact, with current growing rate, probably by 2030, the total amount of asset under management of family offices will surpass hedge fund already. So it will achieve 5.4 trillion. Those are a huge amount of money. So if we can leverage this money, even 1% or 5% or 1% to the impact, that's really is really great to the whole society.
Really love this point that you mentioned about impact. So kind of going back to Marguerite, you mentioned that Midas was one of your portfolios. I hope you're okay. And so like, what would give Midas like a competitive edge compared to traditional actors in the space? Because like Vanessa mentioned as well, there's traditional financial players in the space that also would do the same thing with traditional assets. But what gave Midas like this competitive edge, to actually release the MT bill and tokenizing these T-bills, for instance?
I mean, I think this is what I mentioned earlier around the importance of regulation and how early you come in the space. I think at the end of the day, for Midas, that would be those two, and then they're launching a bunch of integration and partnership that put them ahead of the race, but that's also related to their early positioning, I would say.
Okay, very interesting. So once we talk about the US market versus Europe versus APAC, where do you see the regulation is mostly like crypto friendly, RWA friendly in this sense? Because we have the SEC obviously, but we also have institutions like BlackRock. They're super bullish on RWA and ETFs. Where do you see is the easiest, or let's say the easiest entry for an RWA project to operate in? Or does it really matter on the type of asset class? What's your thoughts on that?
I think at the end of the day, for us, we will have very different theses depending on the asset class and depending on the positioning of the company. So in some instances, it's actually better to have to follow the SEC regulation, and because sometimes it can be a bit more flexible than in Europe. But at the end of the day, what MICA offers in Europe is a very clear framework as to what the rules are going to be for the game that you're going to play. Whereas in the US, what we've seen actually early on, especially 2 years ago, was that there were a lot of actors launching their business, operating a bit in a gray area, not really knowing whether they would go through the holes in the nest or whether they would be fine. And actually, you don't want to be in a position where you are already a well-established actor and then you have the regulation that comes after you and risk closing your business for your biggest market. So as an investor, we're also quite happy to have the rules being very clearly laid out and knowing on which field you're playing. That being said, also like the US is also a very fertile ground for innovation because of that and because you can play in that gray area, and so at least things are moving forward and big businesses are being built. So for us, I think it would be on a case-by-case basis depending on the industry and the type of business you're building.
So what kind of use case do you think will be pioneering in the RWA space? Is it going to be cross-border transactions, or there's going to be other use cases that we're going to be seeing? Like BlackRock was just talking about, back in Davos, is that we might reach to like $1 trillion market by 2030. So do you see that stable coins will be dominating the market? We saw that like with Paolo from Tether, they've been doing an enormous amount of profit just by tokenizing these kind of T-bills in the U.S. market and earning a 5% yield out of that, which is enormous. So what are your thoughts on to that? And will we see a European stablecoin very soon? What's your thoughts?
So stablecoins obviously are the best product market fit right now in RWAs. Tokenized financial assets will be the next one. The European stablecoin regulation, MiCA, really killed the stablecoin market for Europe, really did not help at all. And also, there's no appetite for Euro stablecoins. People want to use the dollar. Like, they're using the dollar to hedge, they're using the dollar to trade. They don't want local stablecoins, because there's inflation risk, there's currency risk. It just doesn't make sense. I'm sorry, I have a very specific view on that. And that's why you see all these stablecoins being hugely successful.
So you think that we're going to only have a US stablecoin because it's stable and it's...
I mean, look at the numbers for Circle's European stablecoins. Only banks can launch stablecoins in Europe. Then you're killing all the innovation and you're killing all the market.
Interesting. Do you guys have any thoughts onto that?
Yeah, maybe I can add a little bit on that. So I think when you talk about stablecoin, you mean the fiat-pegged stablecoin, because we also have an algorithm-based stablecoin. Probably the fiat-pegged stablecoin, or we call it tokenized money, is one of the most successful tokenization use cases for now. And it's very important because that will really, I believe, it will really greatly help us to engage people for the adoption of token eventually. Because when we talk about tokenized asset, even stablecoin they don't use, will they really invest or buy the other type of coin? So I doubt. So if the stablecoin is somehow widely adopted, so far we know there are several great, companies who are provided the stablecoin products. Well, on the other hand, it can help greatly as a part of the ecosystem and the infrastructure, because we need the whole infrastructure ready, like a payment, like a stablecoin, like liquidity, like the whole thing. And when it's ready, and I think the whole tokenized RAM will, we can speed it up and to engage more people for the adoption. And again, maybe last words for me, I'm very bullish about the fund tokenization. As you mentioned about those kind of market money making funds, the mutual funds, I think they will somehow become the killer use cases, because it's a very high liquidity and relatively very low risk. And before you park your money somewhere for long-term investments, there are a lot of amount of money they don't know where to park. So if they just invest in short-term to this kind of T-bill or this kind of DApp, all these kind of cash equivalents, that will greatly encourage the institution to think about adopt tokenization as well. And eventually I would say retail is important, well, very important when institutional investors step in. That's really is a sign that the adoption comes. So I'm looking forward to that days. I think it's not that far away.
Yeah, we're still quite in the early days of RWA. Marguerite, would you like to share something? Okay. So that brings us to the final segment for this panel. Can you share with us like a final take on your kind of more like the opinion that you have towards RWA? Where are we going now? And as well as just like a tip to the founders in the audience here that are looking for funding, since you guys are operating in the investment space. What is like one tip that you would like to give as well?
30 seconds answer each, please. Thank you.
Yes. So it's not because right now stablecoins and others are the next big thing that it's not going to change, and it will still, the pace of innovation is very high, so you will see a lot of like new ideas, new business models, new assets being tokenized. Timing is everything for founders, as you may know. Ideas are cheap, execution is everything. So if you have an edge, if you are the market specialist of your asset class, and you are able to provide, added value, I think tokenization is a great way to develop new business. As in the future, everything will be tokenized, is our view. So you just have to keep grinding and just make sure your timing is right.
Okay, awesome. Thank you so much for listening, and yeah, I hope to see where RWA takes us. Thank you, everyone.